Warren Buffett actually weighed in on the Lyft IPO yesterday. I asked him if this hot IPO is a good investing opportunity, and here's what he said.
I don't know whether the aggregate valuation they're talking about is close to $25 billion now or something like that. And I certainly wouldn't buy a business for $25 billion. I always think in terms of buying the whole business. If we buy 100 shares of General Motors, we think we're buying the whole business, and we multiply. If they've got, the billion, 200 million shares out, and it's selling at 35 or something like that, that would be 40-odd billion in the case of GM. So I look at what I'm getting as a part owner of a business, and I don't know why, with all the things you can buy for $25 billion in this world, that you would pick a business that really has to be earning $2.5 or $3 billion pre-tax in 5 years to even be on the same radar screen as things you can buy right now. So I have never been a big buyer well, we haven't bought an initial public offering, or I haven't, Charlie hasn't. I think since 1955, I bought 100 shares of Ford when it came out.
What did you buy?
It was Ford Motor. Gus Levy was running it as a favor, gave me 100 shares, and I have to admit it now, I think the statute of limitations has expired. I took a free ride on 100 shares and made $500, and it's the only time I've ever done that. But I was making $12,000 a year at the time, and 500 looked very good to me. But I think buying new offerings during hot periods in the market, I don't think it's anything the average person should think about at all.
You have said that you've missed out on some of those, like you should have bought Amazon a long time ago, you should have bought Google/Alphabet a long time ago. Could this be one of those scenarios?
Oh, it always can be.
Yeah.
I mean, there were a paradise at the Desert Inn one time, many years ago. That no, they had them in a little case. They came up 32 times in a row. Well, that's what, 1,000 times, a million times, a billion times. 4 billion to 1, a little over. So you can go around making dumb bets and win. It's not something you want to take as a lifetime policy, though. I mean, I don't worry about. I worry much more about the things I do than the things I don't do. I mean, I missed all kinds of opportunities in my life, but you just want to make sure that you're on the side of the house when you bet, rather than bet against the house.
Again, that's Warren Buffett talking about whether or not he'd be buying into a hot IPO like Lyft. Ed telling that he said he hasn't bought an IPO since 1955.
I think it's very telling. Also Warren's the guy. He needs to touch the product. He needs to know the product before he invests in it. I think that's a big part of how he approaches investing generally.
I don't think it's the not knowing the product.
It's not knowing the product in this case.
It's not knowing the profitability or how they're going to get there.
I think profitability is the key question. If you're an investor, if you want to jump into this stock, you got to have a better sense of where the profit margin is going to come from, because right now there is no profit margin for these companies. A lot of these tech IPOs, when they're coming up, they're IPOing without profits on its books. The promise, however, is that as the market lifts up, they'll finally get into that margin. I think it's a tough game, just because of the pricing pressure.
Do you think you can do it with two competitors? I mean, even if there's down to only two, is there a way to make that profitable, or is this going to be a battle to the death for one of those two?
So in terms of the market share fight between Uber and Lyft,
yeah, I don't know that they can ever get rid of the competition.
I don't think either one is going to be profitable in that scenario. The way they're going to get to profits is which one of these two will be the first to get to autonomous, and that will still take a while no matter what. In the interim,
second iteration.
That's the second iteration. But there is an interim step, which is both companies are also trying to find a way to transport people through other types of sort of means through different legs. So, for example, I can get a car, which might take me to a bus stop or a train stop, which might take me to a scooter stop. They also have an investment in scooter sharing as well. So what they really want to do is they want you to be a transportation service that will tap into the existing infrastructure as opposed to just our riders.
By the way, that chart that we showed is outdated, because with the higher price that it came up with yesterday, that was showing Lyft at a valuation of $18 billion. This latest valuation puts it at 24 billion, so
24.
it would move up a couple of moves on that chart.
And
just based
we'll
on
see
that.
what happens today. I mean, the nuance of the pop, I think, is something that, is worth taking a closer look at. How much money they're going to leave on the table, how much will these early investors get out of this. There's also a lockup period for the inside shareholders, and, I think there's something like 90 days with this one, which is not unusual. Just your belief in this company as a company in terms of where it's going to go, that's a huge part of understanding that pop.
So even pre-IPO, he wasn't, he's smart enough to never buy on the day of the IPO, but he wasn't in stocks. He didn't get in at the IPO price ever since 1955.
He said the only IPO he's ever bought, and I didn't get more specific, the only one he ever bought was Ford Motor.
There's a couple you could have bought after they came. Google, you should have bought.
Apple certainly.
Facebook went down and then went, you can do it, but usually not the day of the IPO.
He's saying it doesn't necessarily mean it's garbage. It's not going anywhere.
Right.
It just says that you got to be willing to take a flyer.
Right.
He bets with the house, not against it.